what I will say is that I dealt with a lot of special situations, which were sometimes they were like maybe media PR issues. Sometimes it was like personal safety or threats, and so like there's like a wide spectrum of all sorts of issues that you face within a large corporate as large as Etisalat. And so when I joined 500 and we went through this process, it was actually very interesting for me because until this point, I always used to feel like I was not very experienced and I didn't really know anything. And then I found myself in my element. And I don't want to sound like horrible here, but I'm just saying like it was a really messed up situation. And I was feeling excited and energized. And I could see through the chaos, and that was my element. I was in my element.
That was the voice of Asher Siddiqui, General Partner at Sukna Ventures. This episode has been divided into 2 parts, and this is the beginning of part 2. If you haven't listened to part 1 yet, I recommend you listen to it before you listen to this episode. Enjoy. I am your host, Ali Zwail, and this is the Startups Arabia podcast, where you learn about the Arab startups ecosystem from the best founders, investors, and operators in the region. My guest today is Asher Siddiqui, General Partner at Sukna Ventures, a MENA region-focused early-stage VC fund that backs exceptional teams building software and data infrastructure layer, enabling the digital transformation of industries. Asher is a tech investor with a global career spanning 25 plus years, having made over 100 investments valued at over $15 billion over the years. He started his career in the late 90s as an entrepreneur software engineer, followed by 10 years in corporate M&A at Etisalat, the regional behemoth, where he ended his career as head of M&A and corporate VC, where he led over $15 billion of mergers and acquisitions and investments into corporate venture capital. After that, he switched full-time to venture capital, where he joined the global leadership team at 500 Startups, now 500 Global, in San Francisco for 4 years. Asher was involved in the development of several VC firms, including Sukna Ventures 1 of the MENA region, Lumikai Fund in India, Zain Capital in Pakistan, Race Capital in Silicon Valley. He's also a GP coach and advisor to several VC fund managers and sits on the advisory board of several VC firms, including Footprint Coalition Ventures, which has been co-founded by Robert Downey Jr., no less, Mirrors Capital, led by the former head of corporate development at Google, and the Treasury, led by the co-founders of Betterment and Acorns, 2 fintech unicorns, among others. Enjoy this wide-ranging conversation with interesting, very deep, very wise nuggets with Asher Siddiqui. I'm keen to dive into your time at 500 as well. But before I do that, there's something I just have to ask you, which is, I mean, you're advising a fund that was co-founded by Robert Downey Jr. So, I mean, what is that like? What's he like, and how did that come about?
Yeah, that's a pretty cool story. Uh, I have a friend that is. So I'll tell you first, like how it came about, and then I'll tell you a little bit about the fund. So how it started was I have a friend that I've known for many years, who like knows the Porsche Piech family for a long time, and he recently sort of joined the Tony Piech's family office to run the family office, and so Chris, my friend, then introduced me to Tony Piech. And so Tony Piech is also like a fascinating entrepreneur and hustler. So Tony is the son of Ferdinand Piech, who was the chairman and CEO and chairman later of VW. And and he's actually, his father was the person that resurrected, Lamborghini and Bugatti and a lot of other brands. He started out at Audi, so he actually was the engineer at Audi and then transformed Audi into this, sort of this brand, and he was the CEO of Audi actually before he became CEO. So so Tony is now the entrepreneur himself. So he's part of the Porsche PF family. That family actually controls VW and Porsche. And by the way, this is a fascinating story. I encourage you to dig up that whole Porsche PF family and how they came about. It's a fascinating story. Anyway, so long story short, so Tony Piech is he comes from this very prominent family, and but he left the family and he became an entrepreneur, and he actually became a journalist, and he was in China, and he and Chris and he were kind of like working together and helping each other out. And Tony then decided, well, there's the Porsche Piech family is 50-50 Piech and Porsche, right? Because Ferdinand Porsche had two children. One married Anton Piech, and the other one is like a Porsche surname. But they own 50-50. But Tony's perspective was, and I'm talking about someone else now. I shouldn't really be doing this, but like, like I hope you won't mind. He's a friend now. So Tony had this view that what about the Piech side of the family? We don't have a brand, and so Tony then built Piech Automotive, and it's this beautiful, gorgeous car. And I like stories, and I'm not a car person, by the way, or a watch person, or any of these things, but I love a good story, and I love this story and the way that Tony's building Piech Automotive is actually very interesting. It's very similar to how Porsche was built. So Porsche was built, but Porsche didn't actually build. They were a design company that worked with VW to build and produce their cars, and he's doing something similar in the but he also saw that electrification and we were in the midst of an energy transition, so he wanted to build Piech Automotive, but he also realized that maybe the technology needed to be different, and so he got involved in sort of the energy transition space. And so like the Piech cars are like electrified cars, but like they're a driver's car, but they're also like sort of part of that whole energy transition.
Yeah.
And so they are limited partners, LPs in Footprint Coalition, which is Robert Downey Jr.'s fund. And and I, on the side, as I think I mentioned to you, that when I left 500, I was doing a lot of coaching
Yeah.
with GPs, general partners of many different funds. And so I
Mm-hmm.
was doing this, and one of the problems, I guess, with me is that I tell people what I think, and I do all of this pro bono. And the reason why I do this pro bono is because I want to have the freedom to be able to tell people what I think. And I spent a lot of years learning how to assess venture funds from an LP perspective. I learned, that. And and sometimes when you will meet GPs that are coming from very prominent backgrounds, they won't listen to you, and if they pay you, they won't listen to you. So I would be like, I will do this pro bono because I want you to hear me in terms of, and it's okay, you can disagree with me, but you need to listen to me and reflect on what I'm saying, and then maybe figure out what the right answer is. But I want to be heard, because I really enjoy doing it, because I learn and develop myself. So I do this GP coaching, and I've been actually, I don't usually plug myself, but I've actually been fairly successful. So in helping, a couple of funds get off the ground, and helped other funds get to the next level. And and my friends Tony and Chris know this, and so they introduced me to Robert Downey Jr.'s partners. And so they've offered many times, and I've been invited to meet Robert Downey Jr. at his ranch, or he was filming for this. He's doing this a series that he sold to Discovery Channel, and so he was filming, and I've been invited, but I have not actually met Robert Downey Jr. because I'm not interested in fame, or I'm like I will meet him when I'm like when the timing is
when it
right,
happens? Yeah.
when it happens, when there's a logical thing. But his partners are people that I like to work with, and because I love what Footprint are doing. So, and what are Footprint doing? So Robert Downey, uh, Junior has had this perspective that just like I did about, and just like so many of us did, that what are we going to do? And he is pretty inspiring because I mean, he's a Hollywood actor, right? I mean, he could have just stayed in that space, and so he's using his platform. And so what they actually have an amazing sort of flywheel. So what they have is that they've got a dozen people. They've got 4 or 5 people that are investors. These people are investors who have been entrepreneurs, who have built companies and exited companies, and they know that journey. And they are also have a very good track record of investing in startups, and they're passionate about climate. And so those are that team. And then Robert Downey Jr. has like, and then they have a bunch of other people, and these people are media production people. And so what they do is they invest in companies that are solving problems that are going to help us manage or transition through this climate transition that we're going through. So the investors think this is a good decision, good investment opportunity that's going to make us a lot of money. And then the way that they're attracted is, what they will do is they will pick certain companies, and then they will showcase them. So they have a production studio where they will produce content and around, and weave that solution around that content, because you need content, you need ideas to tell stories. And so what Robert Downey Jr. has done is he's created this flywheel where they've actually sold a show to Discovery Channel, where he's talking about companies, and some of the companies that he's talking about that are changing the world are companies that are invested in, and the companies that have allowed Footprint to invest in them. So I love that model, and so the reason why I work with people like Footprint is because sometimes you're doing an amazing job yourself, but sometimes you don't know how good of a job you're doing, and sometimes it takes some dummy like Asher to show up and tell you how to articulate your story. Not to say that they don't know how to tell their story. I'm just saying that sometimes it takes a 10-year-old child to come in and tell you what you're really doing. And I'm that 10-year-old, and I love it,
Well,
and I love
more like
helping.
the decades experience and having an LP perspective to add. So yeah, cool. Okay, moving like to 500, and you were kind of part of the management team during that
Yeah.
tough period of transition when Dave left and all that happened. So were there any existential moments for 500 at the time, or was it more about just managing the the new phase and structuring it?
So I mean, look. So this is where my British skills, diplomatic skills, will come into play. So um, like I think every organization goes through sort of like challenging times, and if you don't make the right decisions, or you don't react the right way, then those can quickly become existential. So I think it was a pretty tough time for us when we went through that process. Um, like it was a very interesting time for me, and I actually enjoyed my time then, because it was a very painful period, and it was a very tough period, and yes, potentially all sorts of existential threats could have come about. Um, but I think one of the things that I didn't mention when I was in Etisalat, one of the reasons why I was successful in becoming co-head and then head of M&A was because I was the new kid on the block that didn't know anything about M&A or corporate finance. So what that meant was that naturally you're not going to give me the most important deals because I don't know what I'm doing, right? And so I would get the deals that nobody else wanted to work on, and let's just call them the crappy deals. Um, and so I would call them special situations. And what I found is that when you look at special situations, like special situations make you think through a lot of different situations and issues. And then once you made that investment, you have all sorts of other problems that you face, and you have to be thinking about risk management. You have to be thinking about all sorts of issues, and we operated in many complicated environments. So I guess what I'm trying to say is that 10 years of doing a lot of special situations, and I'm not going to talk about any of those specific special situations, but what I will say is that I dealt with a lot of special situations, which were sometimes they were like maybe media PR issues, sometimes it was like personal safety or threats. And so like there's a wide spectrum of all sorts of issues that you face within a large corporate as large as Etisalat. And so when I joined 500 and we went through this process, it was actually very interesting for me, because until this point I always used to feel like I was not very experienced and I didn't really know anything. And then I found myself in my element. And I don't want to sound like horrible here, but I'm just saying, like, it was a really messed up situation, and I was feeling excited and energized, and I could see through the chaos, and that was my element. I was in my element, and I guess so. I guess what I'm saying is I enjoyed that, and so we went through the process, and I was grateful to be there to be able to find a solution, to be instrumental in finding that solution. So. Uh, I don't know. I didn't really say much. That was a very English response. But
All right. So, okay. I mean, now, while you were at 500, you raised
yeah,
like, or you were part of raising about $100 million for the Opportunity Fund, and can you tell us more about that process? How you went through it and how it was actually achieved eventually?
yeah. So okay, so we were coming out of this sort of challenging transitional time, right? So the Opportunity Fund was, maybe I'll explain to you the thesis of the Opportunity Fund, and then I'll talk to you about, like, maybe I think that'll help me sort of take you through my last year to exit. Um, so when I was at 500, I had this sort of vision for where 500 would go, and that was actually fairly in line with, I think, what Dave McClure, the founder of 500, had envisaged, and so I think we saw eye to eye, and not just me, but also some other members of the management team, that saw the same vision, and so we wanted to execute on that vision. And part of that vision was, we're laying so many early bets, small early bets in founders all over the world, and we are learning so much about these new markets, these environments, and their journey, and we have so much data on them, and we have so much time. And so one of the challenges that you face with venture is that you have to make decisions very, very quickly, because you are reacting to what is presented to you. So deal flow comes to you, and you have to react to it, and you have time pressure. And of course, VCs are masters of figuring out how to slow the process down so that they can find time to reflect and digest this. But in a boom market, you just have to react and think on your feet. And but we're basically price takers, right? So that's the reactive nature of venture in one aspect. But the interesting thing for me was the Opportunity Fund, which was, we could spend 2 to 3 to 5 to 6 years sometimes observing companies, observing founders, observing their their trajectory and their development, and we were able to engage with the founders that we saw were doing something interesting, and see how we could be helpful. And that was cool. So it was like learning data, and then find out. And obviously chemistry is important, so like, is there chemistry here or not, and can we be helpful or not. And what we found was that we were able to access companies that were like getting there, and they were like doing very, very well, and we had the luxury to build relationships with them, or rebuild relationships, because the people that invested maybe very very early on, and now they have a new set of investors and others, and we're still there, but we're on the cap table, and we're small, we're super early, right? Typically the first institutional check in the business. So what I liked about the thesis of the opportunity fund was that we were able to take our time, build relationships, and then uh, go and offer early, like, okay, I'm just going to make this up as an example. You're thinking of raising a Series B round. I will, early on, I'll just say, here you go. Here is a check for your Series B because I have conviction around you. And that's just going to help you get more momentum because, it's like anchors are important. And so if you can get the right signaling, it just creates that momentum. And then that momentum so we were basically going out there saying, and, if you have spent the time in building the relationship with the founder again, then they're more likely to consider you. And then if you're willing to flex your network and help to sort of optimize that process, then obviously that's also super helpful. And then, don't forget, like, part of the sale process is, getting independent perspectives. And so, like, me putting money into a company is independent now because I have spent a couple of years looking at this company, and now I'm investing in this company. I have an independent perspective, and maybe I can share that, and maybe my insights are deeper than the new investors that are there because I've
And
had
carry
time
more
to.
weight. Yeah.
Yeah, and we did a bunch of things, some cool things, like we with the actually the founder of Tribal Credit. We built he built an algorithm for us that was able to do sentiment analysis on founders and founders' ability to raise the next round, which was a very interesting. And so there was this founder score that we had, and so we found
Yeah.
that
That
these
was Angel,
founders.
right?
Yeah, Angel, exactly, Angel. Yeah,
Yeah,
yeah.
yeah,
So
I'm interviewing the founder of Tribal next week, by the way.
oh, fantastic. You know what? So I would
Wow.
recommend that you ask him about that journey, about
Sure.
that project with Aman and myself. That was a lot of fun. Um, so anyway, so that was the thesis, I guess. So fundraising was great. Like uh, you know, we had an anchor investor. I think that was important. And then along the anchor investor, we were able to get a bunch of other sort of co-anchors, and we got to like 45% of the $100 million target. And we were going to do a first close. Uh, but there was something that was going on in the background, which was that, like, venture funds are partnerships. And so one of the challenges of partnerships is that, you need to sort of form some sort of consensus around this organization. And when you have a vision and a view of where you want to go, and maybe there's several other people within the firm that have this particular view, this is the direction that they want to go. And then there's this other set of people who have a different view. And I'm not saying they are wrong or right. It's just that I have my aspirations of what I want to do, and they have their aspirations of what they want to do. And then what we found is that we were at this sort of fork where I think the divergence was getting sort of wider. And so around that time is when a lot of the people that wanted to sort of go into, like, double down into the venture fund aspect, there's the VC fund, and actually just be hardcore investors and invest, they started to leave. And so when we left, that's when, so that's actually the reason why sort of I left, and so many other sort of investors left. And and it's been fascinating for me because the 500 alumni, or I would say, almost, potentially 500 mafia, um, is like a fantastic high quality group of people, because all of us are doing different things in different environments. Everyone is doing well in whatever they're doing. Some are founders, some are VC funds, some are doing other things. Um, but what is cool is that we're helping each other, we're working with each other. So I'm actually involved in half a dozen projects that half a dozen people funds in within the alumni ecosystem. And we have a WhatsApp channel. We're like actively engaged, doing helping each other out. And then there's like a bunch of founders that have come out of there that are building, and we're helping each other out. So I think that is one of the coolest things about being part of the 500 sort of alumni, is the alumni is very very high quality.
Yeah, they are.
Yeah, yeah,
Um, but I just want to double click on one part, which is the LP engagement process.
yeah.
How did you create that pipeline? How do you get the meetings? How do you decide which LPs are appropriate for you? What do LPs want to listen to? What do they want to hear, or is it different? Uh, can you tell us more about that?
Sure. So it's like fundraising is hard. Fundraising. If you think fundraising is hard for founders, wait until you're a VC, because when you're a founder, when you're fundraising, it's hard because you have to articulate a story of the future, a vision of the future, and you have to convince investors to believe in your vision of the future. But your vision of the future is finite in the sense that it is a specific opportunity and it's a specific window into the future. The problem with venture funds is that you're basically pitching to LPs, limited partners, who are investors in a fund with a collection of general partners who have a collective shared vision of multiple futures that they will invest in, trust me.
Yeah,
I mean, that is, and
trust
oh,
me, I'm
by the
going to be good
way,
at this.
yes, trust me, I'm going to be good at this. And I want your money for 10 years, because within a 10-year window, I will start to provide you with I mean, okay, so within 5 years, you'll start to some of your capital back, but you need to give me this money for 10 years, and it's not a liquid sort of asset. Um, but, so like it's a very tough thing, right? To invest, but LPs do it because VCs, or general partners, have insight, a unique insight into a particular market opportunity. They have a particular lens, and the LP is really giving a GP the money to invest in something that the LP cannot do themselves. So when you give money to a money manager, you give it to a money manager because you can't do it yourself. Now, the challenge comes when the LP thinks they can do it. The LP thinks that they can invest directly in the next Facebook or the next Uber, um, and the challenge comes there because and I'm not saying they can't. I'm saying that um, you know non-professional investors that have capital but aren't professional investors for a living, the probability of them hitting Facebook or Uber at early stage, where then it made sense, um, uh, you know is like going into a Vegas style casino or buying a lottery ticket. Like, the probability is very low, and if it happens, fantastic, but it's very improbable. Now, and that is one of the challenges. So I'm going to ask you a question, but I wanted to set the ground or context around,
Yeah, the
what is that
mindset and
relation?
the yeah.
Yeah. So how did I? So like that's the background, the context, and so like now there are some investors that will are actively looking for LP opportunities and to invest in funds because they recognize that. And I myself, by the way, do that. So I invest directly in the MENA region because this is a region that I know, and I invest in a specific asset class that I understand: B2B SaaS and enterprise software software infrastructure. I understand this. But if there's a consumer fund or a gaming fund, well, gaming now I know more about it, so maybe not true. But there was a time, so I became an LP in a gaming fund. Um, and I learned gaming that way. I became an LP in a fund, a fintech fund, because then I could learn, actually in several fintech funds, so that I could learn about fintech, and that kind of informs me. So the point is, I will invest in other markets as an LP because I cannot execute that. I don't have the best networks in Europe or US or India. Yeah. And then, the thing is, there's a great learning opportunity. And then that learning opportunity of all this data that you're getting, that data, if you crunch that data and reflect on that data, that will inform you, as unlikely that it may sound, as unrelated as what you are doing as a day job in the MENA market, the perspectives that you get will actually inform you. Even if you're doing something, like you have a logistics company in Dubai, it's interesting what you can learn from that. So, but the thing is, you have to be active and you have to be involved in learning. So that's kind of like sort of what I do as an LP. Now, how I started fundraising, whether it was at 500 or after, I started to meet with people in my network. I started to meet with people that were already LPs in 500 funds. And what I did was I basically flew around the world, and I would, try to schedule meetings if they would meet me. um, and a lot of them were referred to me, so they were intros that were made. So I was interested in meeting somebody, and I would check with my network to see who do I know that can get me a meeting with that person. So majority of my meetings that I had with prospective LPs were either, again, I said, like people who are already LPs in previous funds, and or people through my network, which, by the way, is the same thing that I tell founders, right? Like, don't go cold calling people. uh, and then what I would do is I would actually I would stalk. I mean, it's going to sound super creepy, and it's going to make me look creepy as well. But like, I would stalk them online. I would figure out, like, what do they talk about? What do they listen to, or who do they follow? Um, like, just trying to get some context around them. A little bit like what you did, I guess, which I'm now realizing, before we did this, is like, you did this creepy stalking of me online. And that's what I guess, what yeah. But it's cool because that's, you're basically taking an interest. And so it's interesting. Like, I did not think it was creepy. I was actually pleasantly surprised and pleased that you took the time to do that, and I respect you for that. And I guess now I'm thinking that, yeah, I don't feel so creepy anymore, because I'm hoping that the LPs also thought the same
Uh,
thing.
I expect they have.
Yeah, well, I hope so. So anyway, so like, the point is, like, you the hardest thing is to get a meeting. And then when you get the meeting, the second hardest thing to do is to talk less and listen more. And this is something that I struggle with, by the way. But um listen, because the first meeting is a discovery meeting. It's a discovery meeting, not a transactional discovery meeting, more like a discovery meeting in terms of getting to know you, and you getting to know me. So this is like all about, do we like each other? Do we have common interests? And that's why it's helpful to do some research, so that you can see whether, it's almost like dating in a way, like, like a first date, where you're meeting them and you're talking to them, and you're mostly listening, because what you're trying to do is, at least this is what I try to do, is understand what matters to them. What are they looking for? And and sometimes I would walk out of the meeting not having pitched my fund, because I listened to them and I realized that my fund is not what they're looking for. And therefore, it doesn't make any sense to pitch it to them. But now I have a valuable insight into what they do like and what they're interested in. So, what I would do then is, I would, instead of pitching my fund, I would then introduce them, or offer to introduce them to other funds that might be more of a fit for them. And that's what I would do. um so, but obviously, if there was an interest, then now that's like the, like, first level. Now there's other meetings that I would call qualified meetings. Qualified meetings are meetings that are set up for the specific purpose of assessing us as an LP opportunity. Now those are managed differently. Those are similar to the way that startups pitch to founders, where, I mean, you do the same thing, but it's like the more condensed, where the first 5 minutes you will meet them, and you will ask them for their strategy, their thesis, what are they looking for, et cetera, et cetera. And that be helpful, because then what you will do is you will then pitch. Now we have 10, say, product features on our fund. We know. Now, we can tell them all 10, but that's pretty stupid. The reason why it's pretty stupid is because you're bombarding them with so much information. But if you spend the time in listening to them and figuring out what are the features they like, then you tell them, well, by the way, this is the core. Now, you have to tell them the core feature. The core feature is super important. It may or may not be one of the ones. but that is kind of what you were most passionate about. You tell them the core feature, and then you will only mention the one or two or three things that matter to them, and that's it. And then you pitch, and then it's up to them to express interest or not, and and then you do the follow up. So I don't know if I helped you sort of, or if I answered your question there, but like that's kind of like the process where you have to meet people, and you have to meet people. It's really challenging because it's the most complicated sales process, shall we say, because it's a sales process where your best chances of success are by not selling, by just being like always like be like water, like flow like water, where you are open to the possibilities of meeting people, building relationships with people, and being as helpful as you possibly can. And by the way, it works sometimes. So there was an LP that where my fund was not a fit, and then they and that was fine, and sort of I introduced them to other funds. What was interesting was that I introduced them to a couple of other funds, and then they came back and then they expressed interest in conducting due diligence in our fund because their experience of investing, I mean, not investing, looking at those other funds gave them some other random perspective. And maybe it wasn't just the three that I made the intros to, but also other funds that they were looking at, where they had this somehow that this aha moment where they were like, oh, Asher's fund thesis kind of makes sense to me now. It's interesting. Let's have a look. So my point is, you know what I mean? Sometimes you just
Yeah,
like
yeah.
random, you'll never know.
You give, and
So
then you never know how things come
yeah.
back to you. Yeah, yeah,
And it's all about
and
paying it forward. It's about karma, right? So when you
yeah,
introduce LPs to GPs, those GPs will also have lots of no's, and they will be like, "Well, man, they were not interested in us, or maybe they were interested in them." And so the number of other GPs that will offer to make intros to me to either one of their LPs or someone who said no to them, and that's fine because the perspective that I have on capital formation, if I can call it that, in the venture world, is that like you as a GP, you're not the only one with the problem. What is your problem? You as a GP, your problem is you have opportunity and you need capital to fund those opportunities, right? So that's your problem. But the LP also has a problem. The LP has capital and they need opportunities to fund, to provide the returns that they need. So the thing is, there are two problems. And then what you need to do is you need to be in the middle and facilitate the
intersection.
process.
Yeah,
Yeah, and so how you facilitate the process is that you find the natural pools of capital that are natural for you, and redirect the natural pools of capital that are unnatural for you but natural to someone else. You do that, and if you redirect, then what we can do is, I mean, obviously, a capital formation is a highly inefficient process today, but there are multiple people that are working on making that process efficient. But like, I'm doing my part in trying to do that. And so, like, I mean, actually, just on that capital formation, if you are interested in this topic, or if any of the viewers are interested in this topic, I would recommend that you follow Samir Kaji. So Samir is the co-founder of Alec. Yeah, and so I'm a privileged. Samir let me invest as a small angel in his in Allocate. So I'm very pleased for that. But I learned a lot, from Samir about venture before even meeting him. Just by listening to his podcast, and so I learned a lot about capital formation, and so what Allocate is doing is actually trying to reduce the friction, which is why I invested as an angel. I'm excited about what they're building.
okay. So speaking about Samir, you've reposted a couple of his social media
Yeah,
posts, and as well
yeah,
as a few others lately, and their tone is, this time is different from what we were at like just
yeah,
18 months ago. We are in a post zero interest rate world, so
yep,
VC returns, are being evaluated in a different way, and the general tone, to be honest, of these posts is kind of pessimistic, or at least that's how they strike me. Is that like a correct evaluation for me, or or am I kind of getting the vibe wrong?
So, yeah, I think I mean, I would disagree with you on that they are pessimistic. I think they're not pessimistic. It's just think of them like I think you need to have a specific perspective on them. So let me give you, and I'm glad that you brought this up because I'm going to use this as a segue to talk about something that I wanted to talk about earlier, which is the zero interest rate environment. Um, so when I was a founder in the 90s, the interest rates were higher. The when I was a f- like when I was in Etisalat, the interest rates were higher, and so like it was only recently in the recent history, last 10 years, is that when we've had this period of low interest rate environments. But when you think about the some of the most iconic companies on the planet, they were born in normal interest rate environments, not zero interest rate environments. So the point that I'm making, and I think that the point that I think Samir is making, is if I may, sort of interpret what I think his message is um, the anomaly was the last couple of years. So we need to delete that anomaly from our minds, from our brains, because it was an anomaly. And and what he's saying is that look at the larger arc of venture capital, and don't look at the last 3 years. And the problem is that there's so many people that were exposed to and came into venture capital. I People call them tourists. So many tourists came into the to venture, and
Hmm.
they don't really understand venture, and they applied their own lived experiences about what they thought venture was, and then they applied it, and they drove, because of zero interest rates, and they drove it up like this. And so, but that is the anomaly. So I think what Samir is saying is, don't look at that, and because that is not a reasonable expectation, and that's okay if you don't agree with Samir. But the point is, what Samir is saying is, if you want to invest in top quartile, top decile funds, then you're not going to be able to do that if you have the wrong expectations. Because what he's saying is, you have a potential key into this ecosystem to get access to these funds, but if you have the wrong expectations, then your key isn't going to fit the lock, and you're going to miss out on these opportunities. And I think that that's kind of like, so it's more, I would say, an education that he's talking about than anything else. And I think that that is what, to touch upon something that you asked me about earlier, is one of the reasons why I talk about the financial crisis of 97 and the dot-com boom and bust and whatever, is that venture is a long game, and you have to look at the history, and you have to project into the future. It doesn't mean that you can copy paste history and apply it to the future, but what you can say is that the future is unpredictable and volatile, and you don't know, but there are certain things that you learn from your history, from your past, that inform you to be able to more accurately assess the potential future. And so that's one of the things that I would say that Samir talks about. But the other thing that Samir talks about is something. And by the way, I passionately agree about these views. That's why I reshare them. Is that this is one of the best times in history to be investing in venture anywhere in the world, and because you have had this, there's been no other time than ever before that you have had so much capital available in every corner of the planet for this asset class. But then at the same time, and this is sort of tied to our thesis of Sukna, which is that at no time have you had such compounding technological shifts that are taking place. And let me unpack what I just said. Is so when I started early, there was early internet, early SaaS, and then we had this thing called big data, and then it's sort of like AI, ML, and then you had like the cloud. You have data centers and cloud computing. but these are all maturing. They are not mature, they're maturing ecosystems. And so what's happened, and there's a couple of reasons for it. One is technological advancements that have happened recently in many cases, and I don't need to repeat any of them. But there's a lot of technological advancements that have happened, right? So in AIML, in computing, in networks. So what that means is that you've got this like, and then you've got cloud and SaaS, which are old hat, right? So like people used to look down and like, oh, you're a SaaS investor, like, oh, you're old school. You're a cloud investor, oh, that's old. You're a mobile investor, that's old, right? But no, that's actually now even more relevant, because what's happened is that there is this you have data that is distributed and available uh, more than ever before. You have more data available, and it's available and it's accessible thanks to networks. It's available, and thanks to computing speeds and network speeds, it's available faster and it's able to be processed faster. And then you've got software technologies like artificial intelligence, machine learning, that are able to crunch and assess and analyze this data. And so what that means is that it's almost like a compounding flywheel of technology and maturity of infrastructure. And so like one of the things that I think about, like when I talk to like the VCs in the valley, and they would look down on my telecoms sort of background, the reality is like, the everything that you see in software wouldn't exist because it needs the hardware to travel on, right? So like, don't look down upon. And so my point is like, you need somebody to build the infrastructure and the hardware to then like create that flywheel of software. And so like, and we are at that very moment. And so I feel like this is one of the most exciting moments in history. Now we're a little bit early. I think people are very, very excited about OpenAI and GPT and large language models, but like I think it's like a little bit early. I think we've been much more cautious on in that space, but it is very, very exciting, and we're and that's one of the reasons why I guess I'm a full-time fund manager.
Yeah, exactly. At this time. No, I can't agree with you more again. I think the timing is perfect, especially for an early stage uh,
Yeah,
fund. There's just so much happening. There are inflection points on the technological level, on the even the social level, and I would add, that it's like on the seriousness level, because there were a lot of tourists, as you mentioned, and they've been somewhat cleared out. I just saw a number that there were like there's a over 50% drop in founders, for example, startup founders over the last year in the US. So that's actually a good thing, in my opinion, because these are like the
yeah,
builders. And
yeah.
yeah, I mean, I agree. It's just great
They
timing.
will. Yeah,
Yeah.
it is great timing. Now, obviously, no big opportunity is ever easy. So my view is it's hard to fundraise today, relatively. So it's all relative, right? So for the last couple of years, yes, it's harder to raise for everybody, but is the opportunity set big enough to dedicate and focus my efforts on? Yes, therefore I'm going to do it, and that's why I'm here, and that's why I'm doing it. And so the market opportunity is there. Is it hard? Yes. Is it harder? Yes, it is. But
Oh
is it
yeah,
worth
much
it?
harder. Hmm.
And so I think the missionaries who have deep conviction are going to stick in this, and I think that those people need to do this. And I would like to see more fund managers in the region come out. Now, what is cool? One thing I also wanted to add, which is kind of interesting, which is in the MENA region, like there's not enough VC funds, there's not enough fund managers and angel investors. We need more. It's funny, like I'm saying this, I'm asking for competition, but because I think when you look at the amount of capital that is invested, so capital is available more than before, but it's not enough, because we need more capital as a percentage of GDP. So we need more investors, and we need more investors with different perspectives and different lens. We co-invest with a lot of VC funds, and while I love co-investing with different VC funds, because we learn from their perspective, which is different from our perspective, which is why we have different funds and different brands. but there's not enough, and it's too small of an ecosystem where I know everybody and everybody knows everybody, and it's like, we need, I mean, it's nice to see new faces, but at the same time, I think we need to expand it, because there's so many missed opportunities that aren't being funded because the people that would see that opportunity aren't there. I don't understand it, and maybe my friend over there doesn't understand it, and so like, so there is this thing. And so one thing I also wanted to say is that this is also different in another way, and that is going back to something I was talking about earlier, which is the pandemic. So earlier, so like the one time in history where the entire planet had a similar shared lived experience is, I cannot like quantify the impact of that, but I'm seeing the impact of that, because what that means is that never before has it been easy, so easy on a relative basis, to build a regional or global company from anywhere. Because today you have people who are decision makers of large corporates or governments that have the same perspective as you and I have on the need for technology and the need to sort of use technology to solve whatever problems it's solving. And there's this openness globally, and so what that means is that you're able to potentially scale from Saudi to Pakistan and India, which is like, for example, like one of our companies, Classera, has done that. They went, they're actually in India and they're in Pakistan, and then they're in so many other markets, and they're selling their services. So, and that is so cool, because I didn't see that happening before, and we invested in a company that was, like, here and in Ukraine and in the US, the Ukrainian founders, and they have business in Saudi, they have business in Canada and US, and then in Singapore, and they're global companies, and there's multiple reasons for that. But my point is, like, I think this is a very exciting time, and that's why I talk about this digital transformation that is global, across industries, across sectors, and across the globe. And so the trick is to find market characteristics about your startup, uh, which makes it successful in, say, Dubai or in Riyadh or Abu Dhabi or Cairo, and find other markets that have similar market characteristics that you can then now go to and target. And you will find that it's not increasingly hard to do it. Now, it's the difficulty is just the local cultural and language barriers, maybe, but that's it. Not like, oh, they're just not ready and open as we are, because that's no longer the case. Now, obviously, this is my hypothesis, and I'm seeing some early signs, and I'd love to believe that that's true. And we're seeing it in our portfolio companies, where they're actually growing across, they're actually expanding into the US, some of them are expanding into Africa or across other Asia, other markets. And this is really cool and really exciting.
Yeah, absolutely. It's just the sky's the limit, right?
Yeah. Well, actually, I would always say, and this is something I said when I was 8 years old, that sounds sad if the sky is the limit. I think there is no limit. In my, this has always been my perspective as a child, as sorry
Yeah,
to like to like on you there, but like,
yeah,
I've always
yeah.
had this perspective, which is like, oh, that is so sad and
It's
so
awful.
depressing.
Only the sky.
Yeah, there is no limit.
Yeah, but I
Are you,
mean, when you were 8 years old, you probably thought the sky was like 10 meters above you or something.
so
Like
I
a ceiling
in
to the.
so I grew up. I was born in 1975, and I grew up in, like, many different countries, including like Africa and the Middle East, and we didn't have access to a lot of the home comforts or whatever, and we didn't have, like, cinemas and TVs or chocolate or whatever. So, I had a lot of encyclopedias and a lot of thinking. So my mother used to call me, uh, a daydreamer of Olympic proportions. If only there was Olympics for daydreamers, and I guess daydreamers is like kind of how she used to think of me. But I was kind of like I guess, a little philosopher thinker, because I had no friends, uh, and And I was pretty shy, so I wasn't very good at making friends. And so, like, I guess what I'm saying is that I I was very lucky because my parents were, one of the people that fell to the wiles of a encyclopedia salesperson, which you had in those days, and they bought them, and I went through them, and I got into like philosophy and history of so many different countries and cultures, which was so fascinating. And I came across the concept of like the universe, which is not static, it's expanding. And so to me it was like, oh wow, like, I mean, long after I'm dead, the universe will still be expanding. Now maybe humanity will not exist, but that's okay. My grains of whatever are going to be absorbed within that. I mean, it sounds pretty morbid and horrible, but like, I mean, I was an 8-year-old child, so like, man, like, that was, and it
That's
was
how it
just
went
very,
down.
yeah.
Yeah,
And then so I mean, the reason why I'm saying this is because like one of the early signs of us thinking that the universe is expanding is when we
yeah.
discovered or
Shift
identified
in
redshift
the
waves.
frequency.
Yeah,
Yeah.
so the redshift waves were like, there's moving away from us, and so when light's moving away from us, that means I mean, it's a I mean, the thesis, but a hypothesis, but that was it. So I'm pretty
Yeah.
big believer in that perspective. So
So the sky's not the limit. Uh, but
there is no limit.
this is a question suggested by Tariq Fahim, actually our common friend who introduces. He wanted me to ask you what you saw as like the fundamental, consistent flaws in the ecosystem.
Fundamental
I'm
flaws
not
in
sure
the
if there's any background between you guys on this, but
so Tariq and I talk all the time about this particular topic, and not just Tariq. I mean, like a lot of a lot of us talk about how could we improve the ecosystem. Um, I mean, there's many, but maybe I will talk about some of the things that I think was the last conversation Tariq and I had, and that was around. So like when I think of the Middle East, North Africa region, Um, and when VCs pitch Middle East, North Africa, they think of it and they pitch it as a homogenous like region. But the reality is it's not, right? So it's a collection of many different countries with unique cultures and unique dialects. So it's actually quite diverse and quite complex with its own set of laws, its own set of their own set of priorities. And so it's actually quite complex there, right? And that is inherently like one of the challenges that we face is that it's not easy to scale. And this was true before and it's still true today. It's not easy to scale across markets, and which is why we focus on specific markets that we have relationships in, and we kind of focus on those markets because if you have relationships in those markets, you can actually have your finger on the pulse of that market, and you can maybe potentially get deal flow out of that market. And also you need to understand what those markets are, and then how can they go from this market to that market and that market, and which markets matter. And so that's just like I'm just like setting up the context of what I'm going to talk about. But one of the challenges that I face, and one of the things that I get really frustrated about, is the competitive nature of the support for ecosystems. Because when it comes to borders and the real economy, I understand every reason, everything for why those exist, and there's nothing wrong with it, and like I accept it and I understand it. The challenge is that technology knows no boundaries. Technology, the internet. I mean, you can't. I mean, well, I mean, theoretically, you could do anything, but the reality is the world that we live in today. You and I are using the same platform today, right now, and I'm in Dubai and you're in Cairo, and we're both. You are in Cairo, right? So I just
yeah, I
assumed
am.
there. Yes. So we're in two different cities in two different time zones, and we're using the same platform. And I think this is kind of like a demonstration of technology used across platforms and across geographies. And so, like, the thing that I find most frustrating is, when we're trying to develop an ecosystem, one of the things that, at least my message to the parties that are supporting ecosystems, is that I believe that they should be taking a regional view, a regional perspective to it, to developing the ecosystem. Now, of course, you have to develop your own ecosystem. Of course. I mean, that is what you are there for. You have to develop,
All right.
like, what they say, like, charity begins at home. Well, development also begins at home. You first,
Mhm.
you take care of, your child, and you take care of yourself before you take care of your child, and then you take care of your community. And that is super, super important. And that makes sense. But having a lens and maybe a pocket or a bucket for regional is super, super important. And I think I would also, and I might piss off some people, I think there's also a lens for global, because we do not exist in isolation. We are a regional ecosystem, but we are a regional ecosystem that is part of a global ecosystem or ecosystems. And so, in my mind, if you are like a fund of funds, for example, you invest in local VCs and local startups, and that makes a lot of sense. But you also, I believe, should be having a bucket for regional funds, and I think that should also be part of the package. And I think there should also be a bucket for global funds. And I'll explain why I say that is because, and I believe it, I put my money where my mouth is. So um, I invest my money into, as an LP, into other funds when I need to talk to somebody, or I need a founder, one of my founders needs help. I'm able to tap into my relationships that I've built as an LP, um, to maybe learn, get insights into what's going on into their market or in their industry, their sector, or sometimes even connect them to through someone through their network to somebody that can help me. So, for example, there's this fund called the Treasury where I'm an LP, and so the fund is the co-founders of the fund are Eli and Jeff. And Eli was the co-founder of Betterment. If you remember Betterment, Betterment's like one of the early sort of unicorns in the fintech space. And Jeff was the co-founder of Acorns, which is another sort of early fintech unicorn. These guys were at the super early stage when there was no infrastructure, so they actually had to build the infrastructure. They had to solve so many infrastructure layer problems for the fintech ecosystem. And so now they've got this fintech fund based in New York. And I have learned so much from just listening to their journey about fintech, but also when I got them to come to the Middle East, and like Faris actually is also an LP, and Faris got them meetings in Riyadh, so they came to Riyadh, and while they're there doing their own thing, we were able to pull them out and have a session with them and the fintech community in Riyadh, for example, where there were literally founders who were building the Betterment for MENA and the Acorns for MENA in the room, and were able to tap into direct knowledge. And do you understand what I'm saying? Like, and
Yeah,
and
yeah.
that is super important, right? So we don't exist in isolation, and I think that it sounds counterintuitive and counterproductive, because people with I've heard some GPs say to me, "What are you doing? Why are you letting capital flow outside?" And I'm not saying that's what I'm doing. I'm saying that, and by the way, like, I'm quite pleased with what my LPs have done. My LPs in Riyadh have done is that they actually have that open perspective. They are actually investing in Saudi funds, they're investing in regional funds, and they're investing in global funds. And then they understand that there's whole relationship, and it's something that I see happening in Saudi Arabia, but I'm not seeing it happen in many other markets, and that is a little bit of a frustration. And maybe I spent too much time talking about that, but that is one of the things that I think about. The I mean, I can talk about other sort of frustrations as well,
Hmm.
but one of the things that I think about is, like, there's this belief that there's not enough talent in the MENA region, and I think that I disagree with that. And the reason why I disagree with that is because if there was no talent in the MENA region, then we wouldn't have hotels or telecom operators or banks or, I mean, who do you think runs these companies? These are people, human beings. And what is talent? Well, I mean, human beings, professionals that have some domain expertise and some
Yeah.
operational expertise. So
People
the
doing stuff.
challenge,
Mhm.
people doing stuff, right? So my point is like talent exists, but how do you repurpose that talent for venture? Well, you need to create an environment that makes it conducive for them to do so.
Yeah.
So, if they're going to take a risk in their career and they're going to leave their job and go and do something, then they need to make sure that there's capital available for them throughout the process of their journey. Early stage capital exists, but then we don't actually have growth stage capital, sufficient growth stage capital. So the challenge is that if a founder is going to quit their job and go and try to solve a problem that they've experienced in their environment that isn't being solved by anybody else, and they have some unique insight into solving that problem, then they need to be sort of incentivized to do that. And in order for them to incentivize, like to do that and take that risk, capital needs to be available. Now, so we solve, and a lot of my peers solve the early part of that problem. So there are some angel investors and angel groups, and some early stage, pre-seed, seed stage investors, and that's cool. I believe that there's not enough of them, so we need more of those. But then the challenge is that some of the best potential people out there aren't coming into the ecosystem because you don't have that level of capital available throughout the journey. So, we have this death valley um, uh, situation at growth stage. So when you look at Series A's, you will be able to find enough investors. But post Series A, and I'm not even talking about Series B, just post Series A and Series B and C, it's a real problem because there are not enough institutional investors. When I say institutional investors, venture firms, VC firms, or growth stage private equity firms that can lead around. So what they need to do is you need to have again this hodgepodge of getting a couple of million here, a couple of million there, and you've got like 10 or 15 people together. Because if you need to raise this much money to get to that outcome, then you need to raise this much money. And so the point is like, how do you do that? And so what's really tragic is that these companies grow and then they get to like A, and then their growth stalls. And the reason why their growth stalls is because there's not enough capital available. Now, obviously, it makes them more resilient. They makes them resilient, and they make more sustainable businesses, and that's great. But at the same time, at what cost? And that opportunity cost is there. And so, in my mind, there needs to be more capital available at the growth stage, and that is something that I'm looking for, because I think when that happens, and then of course private equity, and we're starting to see corporates now coming in and sort of looking at acquiring companies and sort of investing. So I think we need to see more of that corporate sort of M&A and corporate VC activity. And we need to see more private equity funds, but we right now the growth equity, because I think when we start to see that stack, then I think we will see true. I mean, I will say to you, look, I wish, and by the way, this is kind of interesting. So when I interviewed so many other VCs, in the Bay Area, when I asked them like, how they fell into venture, they were like, well, that was not my intention. My intention was to build another something, and I couldn't figure out what I was passionate about that I wanted to build. So they kind of fell into venture, and they liked it, and they and now 10 years, 15 years, 20 years later, they're VCs. And that's actually what happened with me, because I actually did not leave Etisalat with the view that I was going to become a VC. I left Etisalat because I wanted to be part of the venture ecosystem, where I wanted to build something, and I was hungry to build. But unfortunately, there wasn't capital or investors that understood what I was interested in this environment at that time. So I became a VC because I thought I will come across teams that I can partner up with or join, or I will come up with an idea and I will sort of build something. And that was the idea. And my story is, funny enough, quite a common story in venture, where that was impossible. And I was a serial entrepreneur. I had built multiple products. Um, that opportunity wasn't available, to me at the time because the ecosystem wasn't ready. Now, boohoo, I mean, my life is pretty awesome, so like I have nothing to complain about. But the point that I'm making is, and this is from a purely rational, like so disassociated perspective, is that there may be other people that were like me that
Yep.
had experienced entrepreneurial, had an entrepreneurial experience, had the opportunity potentially to build something, but they aren't willing to take that risk because they believe that this is a regional opportunity and there's just not enough capital available. And one of the challenges that I've seen with a lot of startups is that you've got say two startups and they're competitors of each other, and what will happen is that one startup will go and they will take up the sovereigns or some like key fund, because there's just not enough capital, so they'll tie that up. This startup may be better and may be great, but they're dead because now this needs to find investors that don't exist because they've tied up and they can't compete, they can't invest in competitive. And so like that's a pretty messed up ecosystem, I
That's a
guess. What
lost opportunity, isn't it? For I mean,
it's
for
a
the
lost opportunity
ecosystem at large.
because I think that
Yeah.
more players could be sustained within that ecosystem. So I guess no, this is not a criticism, it is, I am just reflecting back to you what I see as the state of our ecosystem. And this is a normal thing because even in Silicon Valley, this situation existed, many decades ago. So we're early in our journey, but I think getting back to something around expectations, I think there needs to be a realignment of expectations. When I hear people saying we want to invest and create, unicorns, and I think that that is something that scares me because I think we're too early. I mean, I think they're right in what they're saying, which is that we need to create success stories, or we need to help success stories so that we can encourage people out. But that is only one part of that equation, and the other part of the equation is capital and support. And then, but the problem is, how do you get growth equity firms? Growth equity firms raise a lot more capital. First of all, this capital needs to be available for them, right? Second of all, you cannot have a growth equity firm that's just going to invest in one country. So by definition and by default, these growth equity firms need to be pan-regional. And then the other thing is that you need to allow these growth equity firms to make investments, take LP positions in early stage venture funds, because those are the people that are there's an alignment of interest for potential deal flow, co-investment opportunities. And so that is how you build sort of a healthy, like something that isn't talked about very often, but like in the Bay Area, a lot of the venture funds that you will see were backed and supported, not just as LPs, but actually even operationally, like funding for, the general partners to be able to quit their full-time jobs and do this, by other GPs who backed people and took a tiny piece. So like a lot of the firms that you will see were somehow backed by other GPs. So,
Yeah,
I mean,
absolutely.
there's many other issues, but like I would just say, like it's early days. We need more capital. We need more managers. We need more, support here, and we need less. We need more of a regional perspective than a local perspective.
Right.
And but the good news is, like at least my LPs are quite open to that, and I see
Yeah.
that. So I'm pretty happy.
And the good news, it's also part of the phase the ecosystem is in. It's a more it's a less old ecosystem, shall we say, and it's natural that you need to, this will build up, and this is the way, these are the growth pains, so to speak.
Yeah, yeah,
Uh,
exactly. We're in the midst of our growing
so
pain.
so maybe I'll move to a final question before the quick fire round on a more like more optimistic kind of note, which is, even though you said we shouldn't be focusing on the unicorns, But I mean, hopefully there will be more than one unicorn over the next few years in from the region. So where do you think, which industries do you think they'll be operating in?
um, across many industries, I would say. So, you know, like there's a bunch of, so obviously, fintech, easy to see a couple of fintech companies today, but I think like more so, I think we'll see a lot of sort of, opportunities coming out of the fintech space. Um, in the software infrastructure layer, so like the software infrastructure SaaS sort of layer, we'll start to see companies that are able to you know generate significant revenues, very profitable revenues, across the region. um, in the CPaaS, communication platform as a service, I'm plugging here because I'm an angel investor. But I would, we're going to see in many different industries, right? So I think it's across the board. It's just the timing is right, but sadly, we could accelerate it if we had more capital available. But yeah, like it's going to happen. We're seeing a lot of interesting companies come out. I think now is a good time because I think we'll start to see some acceleration there, and I'm hopeful of this. So every time there's a downturn, one of the first things I think about is market consolidation. This is my M&A hat coming on, right? And so there was this company that I remember investing in, and they were a B2B software, B2B SaaS company in a specific vertical that I'm not going to mention. And then there was another company that was fantastic company also, but it was a consumer company in the same vertical. And so what happened was that this consumer company in that vertical started seeing this B2B SaaS company in that same vertical as potentially complementary. And so what they did is they started building products to compete with that because they thought, well, we could be soup to nuts, like own that whole space. And these guys started looking at building a competing consumer product. The problem is that the DNA of, so you have two different set of founders. Their DNA is different. The DNA of this consumer company is like they understand this, and I'm not an investor in that, but this person is a superman in that space. This is like their superpower is. And then this other team where I was an investor in the B2B SaaS company, this is their superpower. And then what they did is they raised money to compete with those guys. And in my perspective, my first thing was like, no, don't raise money to compete. Raise money and merge and consolidate, because clearly you're you feel like there's not enough. When you start to look at adjacencies, that means that your growth is slowing in your core. And if your growth is slowing in your core, you start to think about adjacencies instead of raising capital to compete. And it's like a downward spiral because both of them raise money and
No, race to the
burnt
bottom.
tens of millions of dollars. Like, and you're not going to be able to do it because they failed in the B2B SaaS because it's not their DNA, and they failed in the consumer because that wasn't their DNA. And what they eventually, interesting enough, what they eventually did was actually merge, where it was an acquisition. But I wish that they had merged uh, in like in
Without all the
earlier,
wasted. Yeah,
without all the wasted capital and also the failure that both of them felt in that. And think about all the people that they hired and then they had to let go because of that. I mean, how about like messing up so many people, sort of lives and trajectories? I mean, obviously they learned a lot, but still, like um, in my mind, this is a great time for consolidation because there are all these potential competitors out there. But sometimes I think that this is an opportunity for us to make one plus one makes five, where you consolidate and grow. And I think what happens there is that then you work together and you actually accelerate because you're not thinking so much about your competition, but you're actually thinking much more about providing a more seamless customer experience to your customers. And so when you do that, your value, you're providing greater value, and then you start to see an acceleration and more stickiness with your customers. And that is how you will see like these big sort of players. And so there's a bunch of companies that I have met with where I've turned them down and I've said no to them. But what I've said to them is like, I think you should just stop. You should stop fundraising. You need to start talking to player A, B, C, and talk to corporate one, two, three, and either exit and sell yourself to one of these guys or merge with those guys and sell yourself to those guys, because this is the best outcome. And remember, venture is a long-term game. This is not a failure. You have learned a lot, and you will go and you will merge, and you will, like, a couple of years you'll do this, and then you'll be out in the market. But now you're a founder that has actually had an exit, that has had an exit or a merger, and then on top of that, you've learned so much more about integrating and building a complex organization out of that. And so, like, imagine what you're going to do next. And that is, now, I'm not saying that I invest in people thinking, oh, I'm investing in what you do next. No, no, no. I want you to, like, focus on what I've invested in, like, creating value there. But my point is, it's easy for me to say that because I'm saying no, I'm not investing in you, but I am excited to see what you're going to build next, and I'm keeping tabs on these people. And some of them have actually done what I've asked them, or what I've suggested to them, and have opened doors and been helpful to them. I'm actually really, really excited for these people, what they're going to do next in 3 years, but also the companies that they've merged into,
Right.
and what they're going to do. Even though I'm not, I'm a I'm a participant observing, right? I have no economic
Yeah,
exposure. Good for the ecosystem. It's so
exactly.
one
Good for the ecosystem.
those people, I mean, so, like, we're benefiting so much from Kareem's success, where so much of those Kareem alumni are coming out, and we've invested in so many companies that have come out of Kareem, and other companies in the region.
Yeah, exactly.
Founders, but they're serial operators, and they understand the journey a little bit better.
Absolutely. And I think it's I could like talk to you forever, but I'm gonna like stop myself and go into the quick fire questions.
Go ahead.
Otherwise, you're gonna miss dinner as
You're
well as
forever.
lunch. Yeah. So
Yeah.
okay, the quick fire question. I just ask a quick question, and you give me your answer. The first is, what book or books do you like to recommend to others?
Oh gosh, this is a really difficult question, because it depends on where you're at, in your journey and what you're thinking about. So I'll give you two suggestions, but I'll give you this. First of all, like, given that we're in the venture community, clearly you need to be reading, and I should be telling you about one of those books, and I will. But I would also encourage you to encourage your viewers to read a book that is not part of your, say, day job, or your, the venture community. And by the way, and I say this, but I'm a victim of this, and I'm guilty of this, which is that I'm just so wound up and wrapped into this whole venture ecosystem. I live, breathe, and read, venture stuff. But I force myself to every now and then read other things, and that informs me, in ways that you cannot imagine. And so, a book that sort of, I read, that is nothing to do with venture, but I think is an interesting sort of observation, of humanity, shall we say, is, now, I don't want to mess this up, so I'm gonna sort of find the name of the book on my thing, but it's called Weird, um, but it's by, yeah. So it's called The Weirdest People in the World. And weird stands for Western, educated, industrialized, rich, democratic. And it was like a fascinating book for me. It's a very thick book, but fascinating book for me, because it helped me to contextualize and frame and understand the environment that we live in today, and why we live in that environment. Because when you think about, like, the Western world versus the Eastern world, and the Northern Hemisphere versus the Southern Hemisphere, there is this feeling of inferiority that people of our hemisphere and region feel, because we like aren't necessarily as successful as people are in the Western or Northern hemispheres. And I think that this um, puts into perspective why some of those things exist, and I think that was actually fascinating for me. Fascinating for me from a human perspective, from a personal development perspective, but also interesting enough from a perspective of like if you understand your environment and I'm a student of my environment, right? That's kind of what I'm a student of, like everything basically. So like I'm constantly thinking about how to understand my environment. And I think this helped me to understand what are some of the building blocks that we can focus on that are the drivers of how to bring our sort of ecosystem forward. So that's one. Um, and in another book, I mean, there's many good books that I think that most founders should read, and I'm sure like people have talked about like the hard thing about hard things or venture deal. There's a book that I'm actually very excited about that I was privileged enough to sort of get early sort of access to, only because I was like some dumbass guy who didn't know anything, and ended up being lucky enough to sorry, I'm just going to tell you the name of the book, but I want to tell you the name of the author as well. So like I was when I was early in Etisalat, I was trying to get into sort of venture, and I was thinking maybe I can find like JV opportunities that we could look at, because there's so many different aspects of how I wanted to engage. And so I was really really lucky, where I came across Tony Fadell, and Tony's the he used to work at Apple, and he was actually the design engineer for the iPod and the early iPhone. And then he left and he built Nest, and I started to talk to him and his team around Nest, and I was really really excited about Nest, and I was also interested in like investing in Nest, and then we were going through this whole thing, and it was lovely because he's a super nice guy. Like I'm nobody in the Middle East, and he's like this really super awesome guy, and he's like introduced me to his team, and we're talking all over email, by the way. And what was interesting was like, and then he goes silent, and they're all silent, and then like Google acquired Nest, and so like that story was over. And but I sort of kept in touch with him. But well, I'm actually not great at keeping in touch, but I kind of like reinitiated that contact. And when I did, he said, actually, I'm writing a book, and it's called Build.
Yeah,
And
build.
I haven't read it yet, by the way, but I'm
I
so
have, by the
excited
way.
for this book. So he actually sent like he gave me an early sort of thing and I'm such a dumbass because I should have like been one of the first people reading it because I had such early access to it. And it's just like one of those books that's stacked up because I've got like a big stack of
Yeah.
books to
No, I
read.
mean,
I'm
I recommend it since
okay.
I
Well,
read it.
fantastic.
So
Thank you. And now Tony's
should get around to reading it and give Tony, some feedback. And I think, also what he's doing, I think he's now based in France, as he mentions in the book, with his new funds. It sounds really cool.
yeah, he's pretty active in the ecosystem, and I'm
Yeah,
actually due to catch up with him in the
nice.
coming months. I need to find out what he's up to. He's cooking
Cool.
something. Yeah.
Um, okay, so that's for the books. So we have Build and Weird. And okay, who do you think we should have as a guest on the podcast, or guests?
Guests. Gosh, I mean, from the region or from outside
Yeah,
the
I
region,
mean,
or
relevant to the Arab startups ecosystem, or the
relevant
MENA
to the
ecosystem.
MENA
Yeah,
ecosystem. Um, Gosh, there's so many names that come to mind. Well, I mean, so like this is gonna sound terrible, but like, so I feel guilty for doing this. So, but I'm gonna do it anyway. So Walid Al Bala, my partner, I learn from him every day. He is so insightful, and so like I know. I mean, this sounds. I feel really, really guilty, doing this, but I honestly think that I think he has such different perspectives to share than me. So I know that it's like the same brand and the same firm, but he has a very different perspective, and I think he would be great, sort of as a guest on the podcast. Um, I think there's so many interesting people to sort of choose from. This is a hard one, man. You've given me.
Okay.
Yeah, yeah, yeah. And maybe I'll come up with a couple of ideas
Yeah.
maybe later as I get to think. Yeah.
Okay. So, like, I like to close the podcast on a note of gratitude. So, what is a gift someone has given you that has had a large effect on your life?
Um, wow. So I think that is an extremely long list. So so I today am a composition and a collection of every single person I have met in my entire life. And so every single person that I have met or interacted with or seen a couple of times passing in an airport or a conference have somehow impacted me and are a part of me. So I guess I have enormous gratitude for like my life that I've had so far, where I have had the opportunity to travel from a very early age to more places than anywhere else, and meet more people than most, and then be privileged enough to like have this life where I'm constantly traveling and meeting new people and people of different sort of perspectives and persuasions so I'm incredibly gifted, grateful to have had all of these people there. And so I think it's unfair for me to pick any one, but I will say that I'll give you an example of one particular one, not because of the person, but because of the act. And so, like, a friend of mine, Mohammed Al Mojil. He's based in London, and he he's also he's actually somebody that you should have on your podcast. So Mohammed is a very interesting character, and I would encourage you to have him. He's different. He's been involved and dabbled in sort of the ecosystem, but like he's in the private equity space now. But so Mohammed Al Mojil and I hang out every now and then. And so we were in London, we're hanging out, and every now and then we swap books. And so he gave me this book, and I picked up the book, and we were met in German Street, and then we walked. I walked after lunch. I walked down Piccadilly, and by the time I hit the Ritz, I had already finished the first chapter of this book, and this book had such an impact on me. It's called King Leopold's Ghost, and it has nothing to do with venture. But the book had an impact on me because I grew up in Africa at a time of heightened African nationalism. So when I was growing up, my heroes were Robert Mugabe and Kenneth Kaunda, who, like I'm sure you may have heard of, are people who don't have a very positive, sort of reputation. But when I was growing up, these were like my idols of African nationalism, and uh, Mandela was not as well known at this stage, and he was in jail. And why this was so interesting for me was because I lived in Lusaka as a child, and we were living in a farmhouse outside Lusaka, and one of our neighbors, which had another farmhouse, was the headquarters of the African National Congress. Now, I didn't know this until later, but I do remember the militant wing of the ANC, which was, fighting apartheid in South
Right.
Africa. Yeah, and we were their headquarters, and so we would see, people in. I mean, I didn't know any of this until much later when my siblings told me about this, but it
Mm.
it helped to sort of contextualize and understand all of this, and I felt like there was Africa has sort of been part of me. My upbringing in Africa was sort of like special to me because Africa was sort of like where I had my formative years, where I didn't have a lot to do, and I did a lot of thinking there, and a lot of my personal philosophies on life were sort of like formed in my time there. And so like I have this very fond memory of Africa, and I have this view of the injustices that people from that continent face. Like and so like this is something that was there, and I remember like as a child, like we went to like Kinshasa, just like Congo, and then I remember when I was in Etisalat, I went to the Congo, to Kinshasa, and so other African countries, and I noticed that when I was a child, these were like modern places, and now they were like crumbling. And what happened? And so what was interesting about King Leopold's Ghost was so King Leopold's Ghost is about King Leopold of Belgium, and it's a story of how he managed to colonize modern DRC, but the Congo, in his personal name as part of his personal. And it
Yeah,
is
it
a
was
book.
his personal ownership, so to speak.
Yeah, personal ownership, and it is. I mean, if you've read the book The Heart of Darkness, or if you've seen the movie Heart of Darkness, so The Heart of Darkness talks about that period, that era, and so this is it's a book by a Berkeley professor, and it had a very profound impact on me personally because it helped me to reawaken and reimagine and question my perspectives on my environment, because like I also come from a sort of a non-white, sort of brown background, from a sort of a like a background, and so and I had my experiences as well of all sorts of discrimination, and this helped me to sort of contextualize a lot of that, and sort of like it helped me to like reawaken and remember things that I had buried in my past. And that was helpful because when I used to be that guy on stage in Madrid saying, talking about assholes, I think what helped here was it helped me to humanize the oppressor and the oppressed. And when you humanize them, you understand that like we're all products of our own conditioning. And so there I see a viable pathway for me to become an oppressor, with the right conditioning. And so when you recognize that, then you know what the pill is, you know what the solution is, which is education and engagement. And it was helpful for me because, sorry again, I'm sorry, these like long stories, but I was in one of my angel investors, and one very few angel investor that gave me money was like somebody who was at the time, and this is in the late 90s, at the time offered to invest in me. He was a mid 50s white man, redneck from Missouri, and I had heard him. We were playing chess in one of these, like in Chicago. There's these like tables where you can sit, and you just sit with random strangers and you play chess. And I used to love playing chess at the time. And we were talking, and I was just like this bitter young man, like, and he was like, "What's stopping you?" Like, and I was like, "Well, grandpa, money. I don't have any And it was just, and he was like, "I'll give you money." And like we'd had conversations, and he, because I'm fair skinned and I have blue green eyes, most people don't assume that I'm from like subcontinent, and they'll think I'm maybe white or whatever. So he had made some comments about my people, and uh, and I was like, well, how and by this time he knew that I was from the subcontinent. I was like, how can you think this about my people, and yet you think of me as somebody worthy of your money, like $10,000 is for me, right? Um, and he was like, well, you're different. And at the time, I just parked it as a like racist kind of like, you're different. And then but King Leopold's Ghost, again, like completely different, right? But King Leopold's Ghost helped me to recontextualize that experience of mine, uh, where what I realized was that he got to know me as a person. And so, yes, he may have these very broad brush views about my ethnicity or people of my ethnic backgrounds, but that didn't stop him from seeing the opportunity in me, Asher, not me of my ethnic background. And so I guess what I'm saying is that, like right now we're seeing conflicts in so many different places, and one of the things that I find is that if people engage with each other and humanize what is dehumanized, um, then you'll find that you may have more peace than war in our societies. And so, um, I'm sorry, this is like a long-winded, very philosophical thing. I guess what I'm you like every single experience that you've had in your life, um, is a potential opportunity for you to learn and develop. And one of the biggest tragedies of life that I see in people is that they have so many rich experiences that they don't even think about again. And thinking about them and reflecting on them and trying to make sense of them, as small as they may be and as long ago as they may be, is so important to helping us develop and as human beings and as professionals in doing what we're doing to provide a living for and
Yeah.
for our families.
And connecting to the human on the other side, so to speak, of the conversation
Yeah,
makes you helps base you and connect you to yourself as well. And
yeah,
uh, it's a great note to end on.
yeah.
Thank you very
Too.
much for your time, and you've been. Let me express my gratitude for that. You've been very generous with your time, and I'm sure the listeners will enjoy it. And hopefully, we'll have you on soon again.
Yes,
Thanks,
I
Asher.
look forward. Can I just add one more thing? I
Sure.
apologize again, but I also
No, no.
have gratitude for Tariq, because Tariq and I had a couple of interactions over a 10-12 year period, and those micro interactions sort of like define our relationship. But Tariq sort of thinking of me to introduce to you to have this conversation. So I'm grateful to Tariq for introducing me to you and to have this opportunity. And I hope that you got what you wanted out of this.
Yeah,
And I apologize if we went off piste a little bit here, but that such is the nature of talking to me.
that's the fun, right? Of you never know what a conversation where it'll lead, and that's why it's interesting and eye opening. Thank you very much.
Thank you. It's a pleasure.
Thank
It's
you.
been a pleasure. Thank you so much.
Thank you, Asher. Bye.
Take care. Bye. Bye.
Thank you for listening to this episode of Startups Arabia podcast. If there was something you really liked about what the guest said today, reach out to them on social media and tell them what you liked. And of course, if you haven't subscribed yet, what are you waiting for? You don't want to miss any of our great upcoming episodes. Also, please rate us and give us comments on our social media accounts so that we know how to improve. And also tell us what you like. We don't mind hearing that either. Until next time, this was your host, Ali Zwail.